shift focus on Fusion Finance. So the numbers are looking in line. AUM has witnessed sequential recovery, though remained lower on a yearly basis. The stock right now is down almost 6.5%, but margins have improved sharply year-on-year basis, supported by higher lending yields. Asset quality has also improved meaningfully and declined in both gross and net NPA sequentially. Cost of borrowing has remained stable, which has also helped in margin expansion. And company is now also looking at focusing on portfolio quality improvement and profitability recovery. But then let's discuss more on this. We are joined by Sanjay Garyali, MD CEO of Fusion Finance. Sanjay, hi, morning. Welcome to the show. Okay, let's just get a sum up from your lens. The Q4 numbers. How, according to you, will the trajectory be continued?
So I think first it's a very encouraging quarter four. And I think this was a result of whatever efforts that we did on the portfolio quality in the first 9 months of the year. And Q4 is actually a result of that. So this is the second sequential quarter that you see profit. While overall 114 crore of profit, but even if you remove the one-time DTA reversal of 77 crore, still the core profit or the core PAT is about 37 crore, which is a significant improvement over the previous quarters. And the ROA for the quarter is at 2%. Now, the most interesting thing or the most positive thing that we see from here is that the recovery in growth is here to stay. And we would want to reconfirm that the 10,000 crore guidance that we have given for next year is absolutely on target. In fact, April and May, first 2 months of this year, already about 50 days have gone by. The performance is bang on plan, whatever we had planned for this year from an AOP perspective. Along with that, the portfolio quality continues to be pristine because it is very important that while we are growing, the portfolio remains pristine. That continues to be from a collection efficiency perspective at about 99.8, 99.9. So we are fairly confident on growth going forward in a very calibrated manner, and the portfolio quality will continue to be pristine.
So you're confident on growth going forward, Mr. Garyali. Morning after Sheshat aside, how do you plan to scale your MSME portfolio while maintaining your asset quality? What will your MSME portfolio expansion and growth plan be?
Yeah, hi, Sheshat. So very important, MSME gives us that diversification place. So if you see, when we started the year, we were at about 6 to 7% of the portfolio was MSME. Now we are at about 11%. The guidance that we have given is at 10,000 crore book at the end of this year will be about 15% MSME. Now the MSME that we do is in tier 3, tier 4 markets. Our customers are MSME. Essentially, the sweet spot or the right to win that we are creating is between the 8 to 15 lakh ticket size. Most of the income assessment that the origination that we do is in the income assessment programs. And that is the strength that we have developed over the last 1.5 years. We have 2 channels, the direct channel and indirect or the connector channel. About 65% of the business comes through our own executives, where we have seen a significant improvement on productivities. So quarter 4 was roughly about 45 crore of monthly disbursement on MSME. This we will see growing from here on. And the portfolio, while it is early vintage, the portfolio or the early bucket efficiencies of MSME also continues to be upwards of 99.3%. So we are confident that MSME, the way we are creating a right to win, will be about 15% of the overall AUM by end of this year.
Also, are current collection efficiency levels sustainable across geographies and borrower segments?
Absolutely. So in November 25, the exercise that we took was that instead of a state level, we built or we took everything at a branch level. So there are 4 categorization that we have divided all the branches. 90% of our disbursements happens from Cat A and Cat B branches. So while every state or the top 4 states where most of our books are, the collection efficiency is upwards of 99.75 and is definitely sustainable. And we are seeing the same in April and May. However, there are certain pockets in C and D branches, which automatically, as a part of the credit metric or credit filter, get filtered out. And there is hardly any disbursements that are, or as a percentage, the disbursements are very calibrated in those branches. That's why you see the weighted collection efficiencies continuing to be upwards of 99.8, and they are definitely sustainable.
How do you see credit costs normalizing going forward? How are SMA-1 and SMA-2 buckets trending? And how has portfolio stress stabilized fully in the fourth quarter?
Yeah, absolutely. I think if you see, it's almost shrunk. It's two has come down to what, about roughly 60 crores on a book of seven and a half thousand crore. It is almost irrelevant or insignificant. I think that's as we say, it will continue to be like that because the flows from the early buckets are almost zero. Yeah, the net flows from the early buckets are 0.1%. If you do a back of the envelope calculation, hardly about 5 crore or 6 crore will move in a month. That's about 15 crores in a quarter at that book. So we continue, and while the book is growing at about 15-20% quarter on quarter. So on SMA2 and on the overall GNPA, you will see continuous reduction happening on a sequential basis. From a credit cost perspective, I think we are looking at a model of somewhere around 2.5%, which will mean a GNPA of what, close to about 2.9 to 3%.
Okay, moving on, what are the sustainable medium-term ROA and ROE targets for the business now?
Okay. So we have given a guidance on credit costs and we have given a guidance on the overall book growth, which is, let's say, 10,000 crore. I'm not giving we don't give annual guidances on ROA or ROE, but on a stable level, so which technically should happen in, let's say, 1.5 to 2 years' time, this business will be somewhere around 3.75% ROA, 2.5% credit cost, and between 20 to 25% CAGR growth.
Right. And what are the latest trends in recovery, slippages, and overall portfolio? What are the trends that you're seeing across these segments?
So we are seeing, we have continuously seeing improvement in the current bucket customers, and essentially it is happening because the customers that we have acquired, the assessment is far superior than what we used to do. Let's say the industry used to do about a year and a half back. So that will continue to improve. Also in the buckets that we have written off, if you look at the write back recovery, so there is 2,000 crore of write off that we did in the last 1.5 years when we were going through a stressful time. It's not that we are leaving that book. There is this quarter also you seeing about 21 crore of recovery in that write-off book, which is a significant upside, about 40-50% growth over the previous quarter. Other than that, there's a recovery of another about 15 crores happening from the 90 plus book. So overall, about 36 to 38 crore of recovery in the entire 90 plus and the write-off book in the hard bucket, and very strong performance in the early bucket collections. So that's a trend we see going forward from here.
All right, I think with that, it's time on the show. Thank you so much for taking time out, Sanjay, and answering all the questions. Thank you.
Yeah, thank you so much, Ashisha and Kavita.